Uh. 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 All right, all right. Let's go ahead and get into it. All right. Let me know if you can hear me. I'm gonna open up the chat. Like I say, I put a message last week saying that I think it was yesterday, saying that I wanted to have it to where you guys talk and have it to where it was just chat. And it really depends on how it goes. Because I want to have this to where we can record it for later on and then you can use it for studying purposes. So I want to try to have as much education in it as possible without taking away from just what we're doing right now when it comes to focusing on live trading. So let me make sure my mic is set. If anyone can they let me know that they can hear me? Let's see.
Hear you?
Oh, cool. What's up, Jose?
How you doing?
Good, man. Good. I'm glad you made it, man.
Heck,
Glad you made
ain't gonna miss this. Ain't gonna miss it.
it. It's a start, man. It's a start. So yeah, we're gonna go ahead and get into it. So today is Wednesday. So since today is Wednesday, we had all that expansion from the last couple of days. And if you zoom out, we're basically taking out a high from June. So today's Wednesday, so I'm not trying to come to the market and dictate the whole week. All I'm trying to do is come to the market and be able to anticipate what I'm seeing based on how prices playing out right now. So something that I see that's obvious to me, just looking at current price action, is this consolidation right here. So whenever I'm looking at consolidation, I'm focused on the bodies of the candles more than anything. So you have two pieces of consolidation. And what I mean by that is if I zoom in and look at this hour, you have this back and forth here, and then you also have this tiny back and forth here. But look at how the market is already expanding up, and we just started the morning. Okay, you said the stream is blurry. Okay, let me see. Oh, it is blurry, huh? Let me try to fix that real fast. Let me try to fix that. because if it's too blurry, I might just go to, let's see. Okay, I'm gonna just share it regularly instead of having it go through OBS and then tell me if it fixes it. So let me change it. Um, change. Wait, I think I see one that says fixed quality, stream quality. Okay, that didn't fix it. Okay, change applications. Here. Is that clear? Did that clear up? Just give me a thumbs up if it did. I think it was the OBS that was causing it to be blurry like that. So I'll deal with that today. Okay, cool. Okay, that's better. Okay, so I have to go through OBS instead. I mean stream through actual Discord instead of OBS. So I'll fix that later on today. So let's go ahead and break down today. So we have this expansion already pushing to the upside. So when you're seeing price like this, you don't want to jump to conclusion on everything, because I was telling you guys how, if you see right here to the right, I always mark up my 15, my 1 hour, and 4 hour and separate those, because I want to see how price is flowing throughout the day when it comes to 4 hour, a 1 hour, and 15. Because when you're taking your trade, theoretically, your trade when the market opens, if you're taking a trade at 9:30, it's going to be inside of a 4 hour candle, and that 4 hour candle is almost closing, because that 4 hour candle is from 6 to 10. So when I'm looking for my trade in the morning, I'm looking for from 6 a.m. to 10, because I'm trying to catch the pre-market before we get that volume that opens up at 9:30. Now doing the live, we're going to be at 9:30. So focusing more on that 10 to 2 4 hour candle. Now, am I trying to catch the whole candle's range? No. I just want to dictate where I'm at in price and how price is going to be flowing throughout it. So when I'm looking at the market and trying to figure out what the market is trying to tell me, I want to see it from a bird's eye view. And when you're separating your times and you look at it from this perspective, then it gives you a better idea on what the market is trying to do. That's why the power of the hour is so important, because if I look at this chart right here, let's make this a little brighter so you guys can see it. So when you're looking at the power of the hour, you got to separate it. The same thing the power of the hour does, when I separate the 4 hour, 15, and 1 hour, does the same thing. So my red lines are my 4 hour, my blue lines are my 1 hour, and then my white lines are my 15 minute. And that's just so I can see it a lot quicker. Because sometimes you'll forget, like, dang, what the 15-minute candle doing? What the 1 hour candle doing? But I can jump to a conclusion pretty quick based off what I'm seeing. Like, I can see this is 4 hour high and this is 4 hour low without moving anything or going up and down time frames. So when you're forgetting to look at certain things, that's what the lines help me do. Now, do I use it all the time? No, sometimes I take it off because I don't want as much stuff on my chart. But like I tell you guys, when you're marking up your chart, you want as less as possible. So we got 5 minutes until market open. So let's just see what we see. So looking at this consolidation right here. And like I said, we had this consolidation all right here. So when you're seeing price expanding, what are you thinking? Like, oh man, should I jump in? Should I wait? This should, in your mind, this should automatically say wait. There's no jumping to conclusion when you're looking for your trade, especially at market open. So I want to see how the market opens and then we respond off of that. So me looking at all this nastiness back forth, this is every 15 minutes. Just look how back and forth it is. So if you're trying to participate in that, that's how you get chopped up. And you don't want to get chopped up. So there's no reason for you to be jumping to the conclusion on anything. And you see how this will be 10 o'clock. So I'll take this 4 hour candle, make a new one. So working on an indicator for that now. But you want to get used to marking up things on your own too, because it reminds you to look for it. But I am working on an indicator to do this, to plot lines, something simple. So 30 and then 45 is here. So boom, that's a 4 hour range right there. And then I take this same range of here and drag it over. And then that'll be, boom, this will be my next 4 hours. Done. And that'll take me to 2 o'clock. So lock that. Boom. And why am I not drawing anything now and trying to jump to a conclusion? Because I want to wait. There's no purpose in me trying to make something look as if it is what it is and it's not. So just wait until it starts to settle down or open up, especially in this predicament where we already have volume pushing to the upside. There's no reason to jump onto it. So when I'm looking at this, you see, okay, we obviously have this imbalance right here on the hour. But this candle right here is also creating a bullish imbalance. We have this high right here that's not touched yet. So this is my first time coming to the market. I've been waiting purposely to come to the market until we went live because I want you guys to see how I'm looking at it when I first jump on the chart. And as you see, I'm not trying to be aggressive. I'm literally just looking at what the market is telling me right now. If I had to look and make a assumption of something, I would just look at this imbalance and I will look at the imbalance in points when it comes to like quadrants. So you have this lower point, this upper point, and you have the midpoint. So I'm just looking at these levels: 22 480, 22 469, and 22 458. And I'm just looking at how price can bounce off of these levels when it comes to if it comes down. Because if it doesn't, then that's you got to wait. So we could just put a yellow box on there for right now. And then you want to make sure that you identify that this is indeed an hour, because if you don't identify it, then you forget, then it throws you all the way off. So now we go here, text 1 hour, here. And the reason I'm using this instead of the midpoint of the line because I want you to see the levels of the actual imbalance. Just kind of fade that out a little bit. We got 3 minutes to open, and this is where you remain patient. Excuse me. This is where you remain patient. Even if I've seen something right now, is it feasible to take it? No, because you're about to get volume open. So you don't want to be in the middle of all that. Just wait for price to show you his hand, and then you take your trade. So in this case, I'm just focused on this consolidation right here, like currently, because price is already expanding up. So if you had to focus on something, I would look at this consolidation right here. And you want to focus on the bodies of the candles. See how we had that back and forth here, back, forth, back, forth, back, forth. We pushed up, came back down to it. So that shows us that we retested this consolidation. We expanded up again, and now we're getting more consolidation, but we're getting more consolidation right above consolidation already. So if you're looking for price to go to the downside to target this imbalance, then you can look for this to be inverted, which is this consolidation, and then head to the downside for a reversal. And then the model could be somewhere inside of here. And then if you look, inside of this as well. So let's scoot this over like that. Let's look at this. So you see you have the model playing out right there. Real tiny. So you have this inversion right here. Real small. So price can mess around and give you imbalance to the downside. That could be in the form of confirmation. But I'm not jumping to a conclusion in this market right now because we're already expanding up. Now, can I see price going down? Yeah. But guess what? You're going to be counter trend trading as well. So you're going against the trend. So why would you go against the trend? For what? If it's not going to give you a good purpose, and we're not even near the Asian range, high and low. So I'm not trying to go against the market. 5 seconds left. Let's see how this market opens. Remember, this is an inversion here. We had that there. So this will be 5 minute inversion. And even though this is a 5 minute inversion, we're not sitting here like, okay, we're going to take this. Like, no, you're just marking up what you see and making it make sense. Just because you marked up and labeled it as an inversion doesn't mean you take it. And this is why you wait for things to happen. You see how that volume we got in the market? You see where this came from. This is coming off of this consolidation. You see how we had a push up retracement. It consolidated again. Then we get a push up again. So price is just in a continuation. So you don't want to be a part of this volume because this volume could be all of a fake out, and it can head straight to the downside. But you don't want to jump in front of that. You want to wait for that to happen. So these trades, when the market's like this, I'm literally sitting on my hands. I'm telling myself like, nah, not today. Now that doesn't mean not right now. I mean, not today at all. It just means not right now. And you have to be willing to tell yourself not right now. So, like for instance, today we'll be on the market for roughly 2 hours, almost till lunchtime for Eastern time. So just looking at the market. So let's go look at a 4 hour really quick. I wish my OBS was working, but we'll fix that. I don't know why it's lagging like that. So now, if you look all the way to the left, what is this right here? This is the same thing that we talked about earlier. It's consolidation. You had this push up, price started consolidating here, and we had a push up. So this was the original consolidation of this push up, which was here, because you're looking at where the push started, where it stopped, and then where it started consolidating. What happens is you see pushes like this, and then you're looking at this as a whole nother move when it's not. All they do is go take out a high inside of this consolidation. So if I want to see price come somewhere, it can potentially come back to here. We could just mark this up, extend it, boom. Now, boom. How many points is that away? 100. That's not that far. So something we can look forward to. Now, is that something that I'm looking to for? No, because you gotta know what you're looking for as well. Don't jump to conclusion just because you see it can go somewhere. Like you need to know why it wants to go there and how it's going to get there. Right now, we're inside of expansion. Like I want to see it try to retrace something, maybe pull back into this imbalance, fail inside of here, then continue up. But I don't want to just see it push straight up because that's not giving me a chance or opportunity to take the upside. But you got to know why you're taking it. Don't just take it just to be taking it. So you got to have that patience. Let's see. And as you see, look at the 4 hour in general. This whole thing right here is 4 hour price action. So for 2 hours, it's basically been consolidating. And why is that? Because price has a time delay as well. It waits for price to get to a certain price, and then it just stalls off and just waits to get new orders or to get orders that people actually want. Price is already booked to me. That's how I see it. It's already booked. They already know where it wants to go. It just needs time to get there, and news gives it speed. So that's how I look at the market. And you see how we had that huge rejection and then that crazy push right back up. So imagine if you're one on the 1 minute trying to catch some of this back and forth, and you're like, man, I don't know, I got stopped out, or I thought it was gonna go this way and it didn't. That's because you need to know where you're at. I know that I have this consolidation right below me. So if it wants to really go down, then it needs to show me a willingness to break this and show me that it wants to stay below this and then continue to the downside. But whenever we're looking for our model, what are we looking for? We're looking for a decent range or a push up and then a push down. So you have a decent push up here, but look at what time frame it's happening on. It's happening on a 5 minute. If this same thing was happening like on an hour, like if this was an hour, then there probably would be a 5 minute nice opportunity inside of here. But the fact that we're having this consolidation on a 5 minute, then I'm not trying to drop down lower to be dealing with this. There's no reason to. Now I can show you, but I'm not. There's no reason for me to be on this 1 minute. Look at it. So you had consolidation, price pushed up. This high was taken here, and then let me show you something too. Because like I said, this is me looking at it now. When I see this push up, this is all one price leg. When I see that price leg, I'm looking at where this price leg came from. It came from this consolidation, which took out that high. This high has a super long wick, and then we had basically expansion in the form of a BISI or a floors being created, pushing prices upside. So this wick seems intriguing to me. So I would take that wick and I would cut it in half and see where the price fall back down to inside of this wick. So if I took that wick and I dragged it over, see how price falls inside of that wick and we get consolidation inside of that wick. So you're seeing the imbalance that you're seeing prices falling into. I'm seeing the imbalance plus the wick, and then we have imbalance that's holding this consolidation up. So that's just more reason for the price to go to the upside. But the model is not present as clean as you're looking for. You can find an inversion, you can find confirmation, but is it the right one? And that's where you can get tripped up at because you're looking for anything and everything. Like, no, if you have to have a top down analysis. If you're going from a 15-minute down to a 3-minute or a 1 minute, like it has to all flow together. If the 15 minutes telling you something a little bit different than a 5 minute, then that's too far off. Like that's close in time frame. That's only a 15 minutes only 5-minute candles. So not 3 5-minute candles. So don't jump to conclusion. Let's see. So we're getting that push to the upside. We're just watching the push to the upside. We're not targeting anything. We're not waiting for anything. Uh oh no. I've been talking the whole time. Oh, that's not good. Bruh. Okay, so can anybody hear me? Because Zach said he can't hear me. I want to see if anybody else can hear me. Oh, I hope y'all guys can hear me. Oh, I hope y'all can hear me. What? Okay.
I didn't know you were talking. Can you hear me?
Can you hear me?
Hello?
Oh
I can hear both of
no.
y'all.
You can. Oh, Jose.
Okay,
You
so
can
I
hear
can't
me?
Yeah,
hear Tony. I can
I've
hear
been hearing
Jose.
everything
I
the
can
whole
hear
time.
everybody else. I can't hear Tony though.
What the?
Oh,
But Jose, you
I
can
can
hear
hear
me.
now.
Oh, you
I
can?
can hear. Yeah,
I wonder, is that a permission? Bruh.
Wait, but
So
y'all hear
I've
Tony
been
too?
talking the whole time.
I hear
And
Tony.
Okay, let me get out and come
No,
back in.
so I heard you when I first got on, but then it
okay,
just
it went
went,
out.
yeah, it went silent. And now I can hear again.
Okay, so once you came out and came back in, you can hear me now.
Yeah.
What the heck? Okay, so that's why I tested it Monday with Thomas because I'm like, what the heck is going on? I know Thomas said he'll be in here tomorrow. Um, okay, I'll fix that. I'm gonna have to use Streamlabs or something different. Okay, all right. So y'all didn't hear nothing I said. Well, some of y'all did.
I
Uh,
I mean it went silent for maybe
huh.
about like 5 minutes.
Okay.
All right, bet. I can hear you now.
Okay, cool. I think what it was is when I was sharing the first screen for OBS, it was doing the sound through there, and when I changed it, whoever was already in here, it didn't change the audio for them. That's what I think happened.
Okay,
So
that's why it was blurry in the beginning.
yeah, because I streamed it through OBS. That's what I want to do because I got everything through there, but I'll figure it out for tomorrow. Because so basically now I want to have it to where I was gonna have it to where everybody is in the chat and they just talk through the chat. But I want to have it to where you guys, when y'all have questions, you trying to ask certain things, instead of just typing it, you can just ask it. And then, like I say, I'm recording the session, but it'll be for later on. That way, you guys can watch it back, kind of see how price played out, how we looked at it. But for the consolidation, does that make sense for y'all? How we looking at it?
So my
yes.
bad. I didn't hear that conversation. But yeah, I
Ah,
see the
okay,
consolidation, so we cool.
okay. So does it make sense for you as towards how we looking at it?
Okay, nah, run that back.
Okay, so I was asking about the consolidation and then how you guys see it and how we marked it up and how we found it. Did that make sense to you guys? Like, was it like confusing? but by looking at the bodies of the candles instead of looking at the wicks.
That makes sense.
Okay.
I missed that part, but I can see
Okay.
it here.
Yeah. So whenever I'm looking at expansion, I'm always expecting consolidation because, like I told you guys, whenever a market runs up, I'm always looking for that consolidation again. So in this point, that's what I was doing. So if you look at the 5 minute, when you're looking for consolidation, you want to focus on the original consolidation. And what I mean by that is, whenever you have a push up or a run like this, whenever it starts to stall off like that, that's original consolidation because from there something's going to happen. So whenever we have a run up and it starts to like die down or starts to lose that momentum, once it starts to go back and forth with the bodies of the candles, you mark that up, and then that'll be a consolidation. And then you're looking for something to confirm that that's some good consolidation. What I mean by that is when you have a push up like this, like little small pushes up, this one here, and then it pulls back down into it, and it just sits on it. Whenever it does that, it's confirming that this is good consolidation. And then now you could use it as like kind of like a footprint to go throughout the rest of the day. So that's why I'm not jumping on nothing, or I'm not eager to jump on anything because I see the consolidation, I see where it happened, I see when it left. So nothing is like, oh man, why did they do that? It's more or less like, okay, let me just wait. And then even something to that is when you have like this swing high right here inside of this consolidation, when I see price breaks above the consolidation like that, and it also broke a swing high. Whenever you have a swing high and you have wicks like this, always look at the midpoint of the wick and see how price comes back down to it when it retests. So if I take the midpoint of this wick, which is 22,494, which is a mid-figure level. So 22,500 is a mid level. So look at that. And you see how price bounced right off of it. It broke above it, bounced right off of it, and we had continuation. So this is not in the form of our model, but this is you being able to follow order flow as it's printing out, because you're seeing why it's bullish, why it's consolidating. So this consolidation we had here, you see why it happened, because it was consolidating at the midpoint of this wick, and then price went for a continuation. Now something like this you'll want to see on like a higher time frame. So let's say like this price action right here was happening on a 15 minute or was happening on a 1 hour. Then you would have a potential trade because somewhere along in here the model will be present and you know where you're at. So like let's say we were looking for the model and we were looking for a sweep of a low to buy it up for inversion and the confirmation. Then this low right here will be the sweep we would look for, because it made a little partial swing low. We're sitting at the midpoint of this wick. Price comes down, it sweeps it, and then from here on up, we would look for inside of this push down, the inversion and confirmation to go up. But right now, this is happening on a 5 minute. So it's not giving me enough wiggle room to go down time frame to map it all out. Now, could I go to a 1 minute and try to map it out? Yeah, but with price action like this already pumping and we already getting momentum, I don't want to be trying to basically go against the grain until price shows me that it wants to do that. So the 1 minute will be bullish and we'll be going for bullish price action, but we're already extended. So price can just fall off, but we also know where price is trying to go right now. It's trying to go here. So when you see price action like this, don't think like, man, I missed it, I should have got in. Like, no, you're going to have price action like this. And that's why for me, a lot of times when I'm taking my trades or looking for my trades, I'm looking for my trade in the morning. Especially when you have markets like this where they're just running up, because your trade is going to be in the morning. It's going to give you the opportunity to take it to the upside for a continuation, and you're going to have less volume. But everybody's not up that early and trying to take trades that early. So we'll be doing it after the market open, which have a lot of opportunities, but you're going to see how I'll sit on my hands a lot and wait for the right ones. Because why you want to jump to a conclusion on the trade, especially if you're taking a test. You're taking a test. You're trying to make 3K. That first initial trade I'm taking, I'm trying to risk 500 to make the 1500 to give me that 1 to 3, so I can be halfway there off the one trade. So just have patience, wait for that one trade. Or if you compound in an account, like wait till you get that good opportunity, and that builds the cushion for the rest of the week. Let's see. Also, just looking at this 1 hour. This 1 hour has 15 minutes left. So you just want to see how this 1 hour is going to end, and then that'll be the end of the basically the opening range, which would be from 9:30 to 10 o'clock. And then after that, just seeing how price plays off of the opening range. Now, is the opening range something I always look at or use? No, I just know that the opening range is from 9:30 to 10. So that price action inside of there is basically can be manipulation. So just waiting to see how the market plays out. But we're in expansion right now. But what I can do for since we waiting, I'll just kind of follow price on the 1 minute and just kind of show you what we're seeing on the 1 minute. So let's focus on the 1 minute right now. We know what's going on with the market. So if I was following this price, and let's say I was in the trade, because one thing that you guys want to have is proper risk management and also being able to flow with the market. So let's say you're in this trade, market's going up, you're getting these wicks back and forth, and you don't know what to look for, how to look for it, or what can potentially throw you off or put you in a predicament to where it's like, dang, I thought it was gonna play out, but it didn't. So you want to watch up close and down close candles. So whenever you have a candle that pushes up like this and you have that momentum, you have down close candles and then you have up close candles. So these down close candles can hold price to the upside. So as these down close candles are being made, price can continue to go to the upside. But you also want to be favorable of the wicks. So like for instance, you have this swing high right here. So when I see that swing high right here, same thing I was telling you guys earlier, price broke it. Look at the midpoint of it, 22,525. Drag that over. And look where we are right now. And then as price is pushing down, what else is there? Well, we have this down close candle right here. So price can fall inside of this down close candle because this down close candle is holding price up until it's broken. So if you look at that, we're inside of this down close candle with the midpoint of this swing high wick. And you see prices consolidating right at the same level, but this is the 1 minute. So when you're marking something up, don't look at it as law. Like those things can break, they cannot hold. This is me just following price action as it's going along. Now you see how you have this swing high. This is something I'm not looking at the midpoint of. It's not an aggressive wick. But when you have an aggressive wick like this, just look at the midpoint when it breaks. Because sometimes you'll see how price bounces off of it and then you get a continuation. And that'll just show you signs of continuation. Or if you're in a trade, it'll show you signs of like, you know what? Let me just close here, close partials. Let me just close it all. I'm seeing the first thing that's basically being invalid. So as price is pushing up and you have a bias of being bullish, you want to see things that are being disrespected. So imbalances, midpoints of wicks, up close, down close candles, all those things matter. Now, do I use up close and down close candles for me all the time? No. I focus more on just market structure itself and then looking at how price is sitting at certain levels. Now you can use up close and down close candles to find out where you're at because it plays a big part. Um, but if you're looking at all of them and you're trying to determine each and every one of them, that's what throws you off. So you want to have those when you're having a continuation of a market. If it's continuing, just focus on up close and down close candles. So let's say if this one was to break this low, then that can show me signs of price wanting to go to the downside. And along that, we took out the midpoint of this wick. So that's just me adding on to what I'm seeing when it comes to market structure. But I'm not jumping to conclusion on anything because if you look at this price, it's not going anywhere. But also knowing the key levels. So to the right, we have our price section. You always want to know where you're at. If you can't look at the market and say, oh yeah, we broke 22,500 or 22,250 or 22,000 even, like you want to know where you're at because those levels play a key part. Now we're heading back down to that 5 minute that we had imbalance that we had marked up earlier. So let me just go back to that really quick. Let me keep this on. Well, we need this. I want to give an example of that. We'll need that. So we broke that. So look how that showed us willingness to go to the downside. Those two things, well, even that one thing, that midpoint of the wick right there was showing us price going to the downside. So imagine if you was in a bullish trade and you were riding the trade up and then it started pulling back against you. And then the first thing is like, okay, I don't have any imbalance to show me that price wants to go to the downside. What else can show me? Well, you had that swing high, you had that midpoint, you had price break it. It was showing willingness to go to the downside, and then you could have closed out. Let's say using a 1 to 3, you could have closed out at 1 to 2, or even at a 1 to 1. Our target is a 1 to 3, but you have to also be aware of the market conditions that you're in and how the market is going to play out. So now we're back at this same consolidation. So I think this consolidation is on the 5-minute. So boom. And then look what we also have here. Let me take these off right now. So here. And then look what we have been created right there. So we just need this candle to close below. Once that candle closed below, what is it giving us? It's giving us an inversion on the 5-minute. The same thing that it gave us right here. But the reason we're looking at this one is because this imbalance is higher. And this is the inversion that just happened off of this expansion up. But if you look at it, what is it retesting? It's retesting this consolidation alongside this one, because you want to focus on the body of the candle. This candle is not closed yet, so you don't want to jump to a conclusion. We still got 3 minutes till this candle closes. So this candle can be just a huge wick and then right back to the upside. So let's say if you're looking for a sale, let's say for some reason you were looking for a sale, then you'll wait for this to be broken and then confirmation going to the downside and then disrespecting this consolidation. If you're looking to the upside, then you have this sweep of this low right here. So you could have a potential trade somewhere up in here, but you got to be willing to have that risk associated with this trade. But this swing, this push down isn't done yet. So you don't want to be jumping to a conclusion early and like, oh, I'm going to take a trade in here. We just broke this low, but nothing's set up yet. You have to wait for it to set up. Okay. There's that rejection. I want to look at it on 1 minute too. Let's see. Let's look at it on both. I'll keep this on the hour. So current interval only. Let's look at the 1 minute real fast. So look, this is 1 minute. And then here's your 5-minute consolidation. So if this is your push up and then this is your low taking, then you have this, which is an imbalance now, which can become an inversion. But see, you know where you're at and you know why, and you're knowing why this is happening. So for me, is this a trade that I want to take? I'm not taking anything right now. And one thing that I told you guys, in the beginning, you're not going to know when I take a trade. We're going to be on live and I'm going to take a trade. But I don't want to influence you taking a trade as of now. I want you guys to see how I'm looking at price action and determine like, dang, I didn't see that. I didn't see this. I didn't see that. And then from there, that's going to help you better your trades, because me saying when to get in and when to get out, you're going to be like, okay, well, I'm going to just wait to say when to get in and when to get out. Now, there's going to become a time where I can't help but just say when to get in and when to get out, because I'm talking about my trade. But I'm going to give you clues on when I'm taking my trade, but I'm not going to tell you when to press the button, but I'm going to give you clues. So definitely want to put that into perspective. So you see that we had this simple price action. You had that low came from this high. So if we had a dealing range on the 1 minute right now, it'd simply be this. Until otherwise. This inversion is inside of a discount, possibly. It's still a ceiling right now. It's not an inversion yet. We need to close above. So we've seen that big rejection. And then you look at the 5 minute, look at the body, and then look at the 5 minute and look how it's respecting that 5 minute busy. So now, if you look at this situation, you have the 5-minute, you got the 5-minute BISI, you have this 5-minute SIBI. So in this situation, you're like, okay, well, I have this SIBI stopping me, but I have this BISI telling me that price is going up. Well, on the right side of the chart, you want to see it push up to pull back down. And that's what this is telling you. So now we have the body close. So either looking at this candle, make this confirmation here. So now this will turn here. And then from there, now you have these 3 candles, which this can create that confirmation. Now you have 2 confirmations because you have one right here. Tiny one. And I love seeing the small ones because the small ones, when they do touch, they touch for a quick second and then they gone. Now that's not all the time, but that's based off your risk. So we got 18 seconds left till that one is done. And then this risk from this trade to that low, that's about 5 points. And then the target of the 43 points. That's a decent trade. But it's based off how you see the market. There's a push up. So now we have another confirmation here on the 1 minute. There. And this whole time, what's telling us that we're still bullish? Well, the 5-minute is. So 1 minute here, 1 minute here. Remember, my confirmations are red. My inversions are blue. So now, this is what you have. So let's say you have setup number 1, which is offering you want to target the high because you want to see where you're targeting first before you measure your risk. Then you see, based off your target, how much can you risk? Well, your initial stop loss has to be at least here. So that's giving you just at a 1 to 3 at the low of that candle here. Just at the low. And then on the first confirmation, because that was the second one, and on the first confirmation, you have this one targeting the high, and their stop loss will be that. It's roughly that. So 14 points. I think the other one's like 6 points or something like that. And those are opportunities. And let's watch how it plays out. And think about it too. We are at the end of a 4-hour candle. So now we're going into that new 4-hour candle. And what is price doing right now? Well, we're bouncing off of this imbalance right now, but are we? Even though you've seen this candle do it, and this candle's trying to make a swing low, you want to see, is it making a swing low to create liquidity, to target that liquidity to the downside into that and push up? Or are we just going to push up, push down and push back up? Or are we going to push down, take out both initial stop losses and continue to the downside? This is where you have to have proper risk management. And you got to be okay with taking a trade based off your risk. And then something like this with me, depending on the risk, like let's say the second confirmation risk was small and then this one was kind of big, then I would take this one. This gets stopped out, take the second one. Or I would take this, wait for the second one based off of the risk. That's all based off of you. I gotta get some background music. I had background music, but OBS wasn't working. I'm gonna try Streamlabs. So look how the body closed. Watch how price tries to be sneaky. There's that push to the downside. So when it goes for imbalance like that, you want it to be aggressive. Now see how it took both initial stop losses? This is a trade where you say, okay, well, based off of me trying to take this push to the upside, you're also looking at the 5 minute. What is the 5 minute telling you? The 5 minute is telling you that price is trying to hold up at this imbalance here. So you got two things into account. Is the 5 minute and the 1 minute telling you the same thing? Now, if this was bouncing off of a BISI, it'd be telling you the same thing. Now, what you want to see is how is price going to head towards a low if it does, because remember too, you still have this wick here that you can look at. And watch how the body closes at that initial stop loss. Boom. So think about it. With this trade, this risk was only about 5 points. And then the other one I think was 14. Well, not even that. It was about, I think when we measured it out, I think it was like, I forgot how much it was. But all in all, you're not even in this whole trade 20 points. That's proper risk management. But if you're always looking for the trade to play out every single time, then you got to sadly mistaken. You got to be willing to take your L's, man. They are lessons. Because think about it. We were looking at this first. This already told us that this can be a choppy market based off of how we had this consolidation to push up and it's back at the same range. But look how we're playing off of these levels already. Look how price is playing around this 1 minute dealing range. So let's watch it and see how it plays out. Look at that 5 minute price action to the right. And look how it's correlating with the price action to the left. what you want to focus on is look at how price is playing around inside of that consolidation on the 5-minute here. Letting price do its thing. Any questions when we're looking at this? I'm curious. Let them candles tell you their story. Now we're headed back to that midpoint of that wick. See how it plays out there. And then look at how price went from a premium one time here, and we had that same expansion and then consolidation once again. Price is just stalling off. So what is it trying to do? But look at the 5-minute. Don't focus on the 1-minute. You're just seeing 1-minute price action of a bullish imbalance or a bullish model, but the bullish model didn't play out. And why is that? Well, the 5-minute is telling you why. That's why it's important to know where you're taking a trade and see how the 1-minute can play on what you're seeing if you don't look for the right trade. Now we want to see how it's going to play inside this consolidation. Let's see. Now imagine doing the same thing on an even lower time frame and you're not in sync like that. That throws you all the way off because we've been talking about this imbalance right here since it was made. And there's also something I told you guys about the model as well. Is when you know how to use the model when it's failing can also be an indicator on what you're looking for as well. So you can use it for everything. If it's bullish, if that's your bias, if it's bullish and it's not playing out, and you're seeing bearishness, it's helping you dictate how the market is looking based off of flow. So what flow are you seeing? Well, we've seen the consolidation, we've seen the push up, consolidation, we push up again, and then we've seen it retrace to the downside. So now we're seeing price continue to the downside. And then if you look at the 1 minute, stuff like this, or you have a civvy like that, this is just you following price to see when it wants to turn around. But you see, we're also inside of this consolidation. So this is key areas where things are happening, which can dictate how price is going to continue because it's happening at a key area. Now, crazy thing is we had that push down. Probably none of y'all caught the push down. I'm about to send a screenshot to Discord of me in the sale. Why was I in the sale? Because you've seen the model failing. A failing model is also showing you willingness to go to the downside. It's all about how you're looking at the trade play out. I'm seeing it fail. I'm seeing how it breaks the first initial stop loss and then followed by the second one. Seeing how it pushes up and it uses that confirmation as a ceiling instead of a floor now. And then we're headed to the downside and it doesn't go above back into a premium, which shows it wants to continue back up. Everything was pointing signs of going down, and then we're breaking below this consolidation. I just jumped out earlier because it's not my trade. But let me post it I'm posting in the chat. Let's see a screenshot of it. Let me see. There you go, right there. Now, I definitely want to know that you guys got questions on that. That's something we went over. I was telling you guys about the model and just looking at it in basically a higher time frame. So imagine you're looking at the model at the higher time frame. You're not looking at it to sell or buy off of. You're just selling it. You're using it to see where you're at in the market. So as price is failing, I'm looking at my initial risk and how much I have to risk, and it's not a lot at all. So as price is pushing down, and I'm seeing how it's failing because it's not stopping at the initial stop loss, it's breaking through it and looking at how the candles are printing out. That's a big part. Alongside the 5 minute, playing off of this 5 minute price action here. And then you also have this here. $22,521. Remember, I was telling you guys, I said we were at a key level, which was 22,500. So just look at how price was telling you everything you needed to know based off of what was happening, what was not happening, because that plays a key part as well. So are you always looking for a failing model? No. But if you're looking for a model in which you're looking for price to go to the upside, you have to have reasonings why. If this was going to, if this at that time was going to go to the upside, I also know that I have 5 minute that it would, imbalance that it would have to break, and we haven't broken it yet. If I take the same level, we label it 5 minutes, so 5 minute, and then I label this as green. Let's put this on this chart. So sync. We're here. And then price went to the downside. And then as price is going to the downside, we had this inversion here. Price did a continuation. And then from there, prices started falling. And then also, look at these up close candles. See this up close candle right here? The body is higher, but if you take this range, like it's too much stuff on my chart now. But if I take this box, I made it white, I dragged it over, price stayed inside of the whole entire time. And then continue to the downside. And then what's right here? A ceiling. So this is you looking at every single 1 minute candle. But you don't have to do that because you don't have to take this at all. You could have just strictly looked at the 5 minute and said, there's not a trade for me right now. That's why this trade, once it dropped below and got near the consolidation, I closed it. I was good with the profits, and then you close it, and then you walk away, and then let it play out. Do what you got to do. And then wait for the next opportunity. And then you see now that we're below this confirmation. So since we're below this confirmation now, seeing how price wants to play out with this 5 minute candle here, and is this going to be a continuation to the downside? So now we're just trying to see how market's going to play out. The main thing that I wanted to show you guys with this is just looking at the correlation between the 1 minute and the 5 minute and seeing how they're different. So imagine the same perspective on a 3 minute and a 15 minute, or a 15 minute and a 1 hour. See how they're saying two different things. But you want to listen to the one that makes the most sense, which is the 5 minute. The 5 minute was telling us that price is trying to go down. It wanted to go up. And why was that? Because we had this imbalance at first that became an inversion. And then from that, we had another one that was acting as a floor, and then we pushed up again. But then we had this ceiling here. So now these two are correlating each other because, or just being opposites, because we have the complete opposite happen right next to each other. So now that's a range where price doesn't want to know if it wants to go up or down. But what could that be as well? What could you look at that as? Consolidation. Because you have an inversion and then you have a confirmation. But you don't have, this is not an inversion yet until it breaks. Ooh, this one. And then price pushes up. And if you look at that push up, what is it pushing up into? This low. And what would that low be? There. And today is not super clean price action. So this is a good exercise to see, especially a failing model. Because you don't want to go into every trade thinking the model is going to play out super clean. You need things to tell you that the model is not playing out how you want. Now, another question would be that I think you guys would have is like, okay, well, with the model, isn't it that I'm supposed to take it as soon as it hits it based on the market? In these market conditions, seeing how the 5 minutes telling us one thing and the 1 minute wasn't, are you taking it right away? Or are you more confident because the 1 minute with 5 minutes telling you buy alongside the 1 minute? Okay, cool. I'll take it as soon as it hits it. Now, am I okay with that? Because initially I was gonna take this one. And then when I seen price just barrel down, waiting out this one candle, then I'm like, okay, well, case closed on that one. And then as price pushes back up and I see how it's rejecting off of here, everything just started making sense on why it is rejecting, because it's using this imbalance to not go back up. So if, let's say, if this was to play out, then seeing it go from premium back into a discount and then play in this range, boom. But you also want to be aware of this. If you're not aware of this, it throws you all off. So that's why time frame correlation is so important, and knowing where you're at and not just taking anything. So now we're below this consolidation. Drag this over here. We're going until lunch. We'll go down 30 minutes and see how price plays out. So we'll go until 11. And we're just watching how price plays out. And if it gives us another opportunity. Me, my own trading, my own sitting here watching the market, I'm not watching a 1 minute. Because the 1 minute, all it's going to do is entice you to take trades. Oh man, look at that happening. Or look at this happening. Let me jump into this real fast, jump in that real fast. Like, no. Like, my favorite time frame is 3 minutes. So if I went to 3 minute right now, look how messy it is. It's a lot of back and forth. Nothing super clean. And then we have this consolidation right here. So we're dropping off to the downside. But we're dropping off to the downside from this consolidation. We know where we're at. But we're also getting consolidation on the 1 minute. So which one do you listen to? Well, I'm looking at the 3 minute. 3 minutes clearly telling me that we don't want to go anywhere right now. It's just bunched up. But why is all of this happening? Because we just had expansion. We just had this. Literally, just had this. So you're not jumping to conclusion on anything. That's why we came to the market. We were patient. Even when it came to a model playing out to the upside. We seen it going to the upside, but we also seen why it wouldn't go to the upside. So do you guys need to start looking at a model as failing to take opportunities? No. But if you have enough reps with the models and seeing how they're playing out and knowing time frame correlation, then your eyes are going to adjust very quickly to you seeing something go wrong and being able to take opportunity based off of that. Because you're still taking the model, you're still doing the model. So as it's playing out, you're seeing, okay, it is something I want to take based off of 3 minute, 5 minute, 15 minute. But if you're going straight to 1 minute and you're basing it off of that, you're gonna be lost. And that's how you get stuff like this happening. You can't even take advantage of it. You're not even gonna notice that it's actually giving you opportunity, even though it's not playing out. Because you're so focused on the lowest time frame. When you want to focus on a time frame that can give you the bearings to get to where you're trying to go. So for me, if I had to choose, like I was telling one of my students yesterday, if I had to choose, he was asking me if I had to choose one time frame for the rest of my trading, what would it be? I say either be the 15 minute or the 3 minute. That's it. If I got those two, I'm good. I don't need 1 minute. I don't need 15 seconds. None of that stuff. Because it just gets in the way. It's not noise. People say noise. Noise is subjective. Noise is because you can't read the chart, but we can read the chart 15 second, 5 second, 30 second, it don't matter. It's all the same thing. It's all price action. But you want the mental capacity as well. And that'll take that from you quick. So that's why it's important to know where you're at and wait for the right opportunities. So now we know that we had, take this off really quick. Take these off. Take these lines off too. So 15, 1 hour, 4. So looking at price action now, we see we have this high followed by this low. And the reason we're looking at this low because this high took out this low. So we just had boom, 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 boom. That's all it's doing right now. So where can price potentially go? Boom. And how can we almost confirm that it does want to go here? Well, watch how it plays at the consolidation. So now that, and then also too, whenever you're having something that you're looking for when it comes to a model, and let's say it doesn't play out, or doesn't play like you want, or play out like you want, and you're looking at new price action, get rid of the old stuff that you had, especially if you're not using it. Could price come back to it? Yes, but you want to focus on current. So you take that off. Well, for me, I will put it in a folder and just label it in notes. So you drag this over. You see how we swept it? We didn't break it, and then we finally broke it. So once we broke it, look what's right here. And look what's right here. You see how it's below it? Other way. Let's see how that plays out. Remember, look to the right. Look at what the woman is telling you, and look at how the 3 minute or 5 minute is just describing it. Oh, I gotta get some music, man. I gotta get some music. Look at that 3 minute. Watch how that 1 minute closes, creating that busy. Possibly, if it does create it. If it does create it, that's a good sign.
Hey Tony, got a quick question for you.
Go
So
ahead,
I'm
go
just
ahead.
kind of catching up and stuff like that. Glad you're on the live stream. It's very
I
very
appreciate
cool.
it, man.
Yeah, but on your image that you put in 960 in the chat, I noticed that your profit was 560. Is that because you're using multiple contracts to, I guess just build the profit like in your trades? Is that what that is?
So I did one contract at $20 a point, so one mini, and then I was showing them. So basically, the model was failing, and we seen why it was failing. So basically, I was taking it against the model earlier, and basically now, so I'm correlating between watching the 1 minute and the 3 minute, and looking at how the difference is what the higher time frame is telling you, even if it's two or 3 minutes above, and what the difference is. But with that trade, yeah, that was going against the model after it's failing.
And you said that was a mini contract, so
Uh huh. One
one
mini.
contract.
Mm-hmm.
Nice. Cool.
Yep.
Thank you.
Yep. No problem. No problem. About to get a boom box. Let's see. Let's see. Let's see. Matter of fact, I'm about to run to the bathroom while that's playing out. I'll be right back. All right, I'm back. I don't know who is in this trade, but this is the trade that I'm in here. I got out at about where it's at right now, and the reason why I got out is because of the midpoint. So right now that puts me up about 900, I think, for the day. Yep, just that quick. Let me post it in the Discord group. Tell me somebody got that one, man. That was an easy call. Won the most amount of points, but you want to look at where the trade is going. Look at that. So, yeah. Why it's not posting? It's not posting. Let's see. I don't know why it's not posting. Let me see. It said it went in there 3 times. I'm like, if y'all see a screenshot in there 3 times, I don't know why it's not. It's not posting. Let me send it to my phone and then post it in there. Let's see. Share PC. There we go. So right now, for today, 560. I think that closed at around like 320. Look at my P&L for today. 5, 6, 7. So yeah, it's 910 plus commission. So just 2 trades, 1 failing model, 1 good model, and I didn't even take it crazy. I just took it to the midpoint from here. So, and then I didn't get it initially here. I waited for it, seen the wick, and then waited for the rejection, and then took it back to the upside. So about 20 points, 21 points. And I was risking my stop loss at this wick. So about 7 points. But see how based off market conditions lets you know how you want to look at the trade or at your trade. Sometimes you're going to be able to place it, walk away, let it run because you're probably waiting for it to come down to a certain area. But when you're in the midst of it like this, the opportunity comes, but when it comes, it's going to come quick, and then you got to be able to capitalize off of it and then be done with it. And there's that push up. Do I sit here and say like, man, I should have held it? Nope. I care less. But why was this the model that I took for the buy up? Because of this. What happened there? This was already telling us what we were looking for. We just had to sit through all of this, and then boom, there's a push up. And then you see in the screenshot, I was pointing to this imbalance here. That should be. And that's what price was rejecting off at first. So when it came down here and it pulled back, closed it. And it started pulling back. And then we're getting to push to the upside. Could have just broke even and let it ride, but I'd rather take the profit and walk away. Happy. I hope somebody took that one. That was a nice one. I know this could have probably scared you here, but remember, the body is the one telling the story, not the wick. That's the initial stop loss, but we wicked it. We didn't break it. And now price is pushing to the upside, and we're inside of a premium now. So do we have anything for a sell opportunity? Down a 3 minute. Oh, that's a nice trade. Look at that. And that is right now 30 points. That ain't bad. And you gotta look at the market we're in when it comes to volume. Have you been noticing we haven't been getting crazy volume? Something that was giving you crazy 60, 70, 80 point pushes a couple weeks ago is now give you 30, 40. That's normal. This is a normal market. In the midst of all the stuff that's going on, this is a normal market. And now you're just following price action. You see this imbalance here? Is that going to hold up? But you're also correlating that to the 3 minute. Don't lose sight of what's going on when it comes to what you're looking for. And that's the hardest part to it, is trying to cope with all of that. But you see how the whole time kept it simple. Just following price action. And the main thing to all of this for today was this consolidation. Because this gave us foundation of where we're at. And remember I was talking about earlier? That high? Well, we got one of them right now. This one's taken out. Right at an imbalance. Here. And look how we're rejecting off of that. And then you're watching how it's rejecting off of the 3 minute, but look how it's responding on the 1 minute. I'll leave that on. And just for reference points, let me show you 4 hour 15 and 1 hour divided. So boom. Look at how this was the beginning. I told you guys this was the beginning of that 4 hour candle. And look how it started off. The beginning of the 4 hour candle was pushed to the downside, sweeping the low. And then once it swept the low, what high did it come from? It came from this one. And then this is that short-term high that it came from, because this is a high right before it pushed up and then it broke back down. So now price is playing inside of this range from this high to this low. And then if you want to look at it from a smaller scale, from that high to this low. And if you want to look at it from a bigger scale, you could look at it from this low to this high to this new low. So there's a bunch of ranges, but it's about finding where you're at. That's the main thing. We've been using the same 1 minute range since what, 9? Well, we didn't get into here. So 10:14. And it is 10:48. So about 30 minutes. Don't feel like it. I feel like I've been using it forever. But that's how you want price action to feel. Just slow down. And look at all this BS. This is BS. So if you can get through this and understand this, when it's clear, it's going to be a lot more smoother. But look how we're coming back to the consolidation once again. But imagine you pushed up and I didn't close out here. And I seen 300, now almost 400. I'm like, I need more. Well, I just did 5. I need more. No, that's not enough. Then it pulls down. I'm like, oh man, hold on to it. Diamond hands, whatever they call it. And then it pushes up again. And then you're like, oh snap, this is it. And it keeps running. And now you have different expectations, because now what you're looking at, your eye goes to this high. You're like, man, it can go all the way up here, or it can go to this high right here. But you're not noticing that it took this one out, just like it did over here on a 3 minute. It took this short-term high out, and then prices fell into the downside. You have this imbalance right here that became an inversion, and you have basically this confirmation right here for a push to the downside, possibly, because that could be a failing model too. But that's still a model. You took out a high, you have an inversion, you have a confirmation, 2 of them, this one right here and this one right here. And look how price is rejecting off of that. So even if you had a sell bias, you still had opportunity. So that's why I'm not going to say buy here, sell here. I'm going to show you exactly where it's at, what to look for, and take opportunities accordingly. Because there are multiple opportunities in a day, especially on the lower time frame. Like this is a 1 minute, but you can find this same type of opportunities on the 3 minute. It's just a 3-minute right now. It's just clustered. And remember, steady buys, aggressive sales. So whenever you have sales, they're very aggressive. But look how price is playing out. Look where we came from. We came from a premium. So everything that it needed to do, it did. And this is something we're doing candle by candle. We're not guessing. We're not hoping. We're not wishing. No, we're looking at the facts. Fact is, this is what it's doing based off market structure. And this is how you want to come to it every day. This is what we're gonna do every day. With the live, I want to have it to where I don't know what day. We want to have a shorter day, maybe like an hour, but most time it's gonna be 2 hours. Like right now we're going on almost 2 hours, so we'll go another 15 minutes and go from there. But this is how you want price to be. This is how you want to be able to read it. Find that consolidation. Find out where you're at. Find out why you're there. And then once you get into a trade, you manage it. You figure out why it's doing certain things. This trade right here, one of the main reasons I was able to hold it once it started pushing up, because look at this right here. This is the inversion. Look at the bodies. Once it hit the confirmation, it came back above the inversion, and then the body just stayed above it. And then look what's right here. Another imbalance. And then price continued up. The reason I closed it is because I was satisfied with what I was up, and I seen this SIBI right here. Well, that's one roadblock. I ain't trying to do no roadblocks. Close it. It pushed up. Oh well. And then if you had a sell bias, you just wait for it to come into a premium, like you're supposed to do. This is how simple you want it to be. I don't need anything else when it comes to what I'm looking for, because I'm just simply following price every single day. I'm up $900 already this morning. And I ain't do nothing crazy. We didn't catch no crazy moves, nothing. We just called it as it was. Because you're keeping it simple. Because I was perfectly fine. I was perfectly fine with seeing this price action and just walking away. Like, you know what, I'm going to just mark it up, see what's going on, and then just play it out from there. If I don't like it, then I'll walk away. I'll just mark it up. With the failing model, gave me a good thing. Let's see, great win here in 1 minute. But I can say I'm not touching it. What the Zach. Not even. Brother Fire. Been mainly using the 10-minute, $700 away from. Good job, man. That's what's up. Zach is 700 away from passing. That's what's up, man. Let's give Zach a round of applause for being close to passing his test, man. You gotta get that done, man. Keep it simple. Don't overcomplicate anything. You're going to find out what you're looking for, man. And just make sure you keep it simple. That's all you gotta do. Just like how we did today. Just keep it simple, man. And that time frame is a good time frame. 10-minute is a good time frame. You see, like I love the 15-minute. For sure, man. For sure. We gotta encourage each other, man. We all here for each other. No man left behind.
Appreciate it.
Oh yeah,
But
for sure, man.
I'll try to catch the next stream.
Yeah. Whenever we listen, we gonna do 4 or 5 days a week, so I'll be here. If nobody shows up, I'm still gonna be here. I just hope today was good as towards seeing how we looked at it and how we marked it up and everything.
Yeah, I think so. I think the other trades, I've only taken a handful of trades on the other one
Okay.
on my account, but it's cool to see what's going on the lower time frames. I think
Yeah.
I kind of the 5
Mhm.
to see whether I'm an exit or not,
Mhm.
but also because I'm just trying to. It's probably not the best practices, but I'm trying to secure some
Mhm.
of the profits, and
Yeah.
so as soon as it breaks above a certain point, I just move my stop loss up to where like no matter what, I'm walking away with something.
Yeah. And that's what I did today. You see, I did the same exact thing. Like you have to have those things that you have that those fail safes for you, where it's like, okay, at least I could walk away with this. So even like what I did today, don't focus on the time frame itself. Just focus on the market structure and price action and how I looked at it. Because you can take the same thing and just move it up time frames. This can be a 1 hour and a 15 minute. This can be a 10 minute and a 30 minute. Like, it could be the same exact thing. It's just the correlation between the two. The only reason I was able to take that failing model is because I seen what the 5 minute was telling me. The only reason I was able to take that 1 minute buy is because what the 3 minute was telling me. Everything was correlating with each other, but you see, it all started with the consolidation first. The fact that I had the consolidation, I was able to find my way every single time. Just have to be patient. 900 for the
Yeah.
day, 2 small trades, nothing super crazy, done. You know what I'm saying? So you $700 away. That's nothing. Now, that's a lot in retrospect to just, in general, but for trading with the skill set that you guys have, that's not going to be a lot. Because all you have to do is wait for the right trade. Like right now, with 700, all you have to do is risk 200. Get 6.
Yeah.
And then, like, I'm gonna tell you too, something that I learned. Man, listen, if you are $50 away from passing, do not take another trade. Don't do it. Wait till the next day. It could be $10. Don't do it. Just wait, cause bro, it can go bad quick. Wait till you got another good setup. It's super super clean. Take it, you done. But $700 away, that's a big deal, man. That's a big deal, and I'm definitely proud of you. Just keep pushing, keep striving, and we'll be in here every day. So keep us updated on your progress. And once you get the account, we gonna help you manage it so you can keep it.
All right, that's the bet.
100%,
All right.
man.
Okay,
Yes,
so
sir.
tomorrow.
All right, see you. Okay, so we'll go 3 more minutes. We'll end it off at 10 o'clock. Well, 10 o'clock my time. But I hope that was a stream for you guys. Like Zach said, just be able to see it mark down and mark out everything, see how the market is playing out, not be so frustrated with price action and it going back and forth and not knowing why it's doing it. Like, price action is telling you a story. You just gotta know how to read it. It's going to be confusing. It's going to be frustrating. But once you're able to catch those opportunities and you walk away from them, man, listen, just walk away from it. Yeah, I could have made a lot more today, but at what cost? Like, what's a lot? You know what I'm saying? Like I just told Zach, 700 is not a lot, but I'm referring to test wise. If I'm seeing 2, 3, 400 on my screen and I'm not trusting the market, I'm closing it. I will take that. That's somebody's work week, or at least 2 days. So just keep it simple, man. Don't overcomplicate anything. And that's the end of the stream, man. I hope that was good. I hope that was some good lessons, good price action. I hope the way I did it, where I took a trade, I kind of showed you guys I was taking the trade without saying it. I hope that helped. I hope you seeing a failing model worked out. Just seeing how it failed and how still able to capitalize off of it. But all those things come into account, man. Just keeping it simple. If you're going to be trading some more today, just know that we're coming off of that consolidation. We're inside of that SIBI right now, which price can reject. So we can kind of sit in that area, but if it doesn't want to, because if you look at this 1 minute right here, this is that initial stop loss. If I drag it over, look at the bodies of the candle, and look at the wicks. So this is the confirmation right here. So trade accordingly, trade safe, and I'll see you guys tomorrow, same time, live stream. All right, my guys.